Hello everybody, welcome back. I've got a 2-year-old behind me on a tablet, and so if you hear any weird noises or demands for milk, just forget about it. That's what, just ignore it. That's what I do. Right, so we're going to have a look, a bit of an overview, really, of what direction the market's likely to go this week. And again, boring traditional markets are going to play a major role in that. The Bitcoin dominance actually now finding itself a decent rejection. I was saying this from the moment we came up to it, 42% dominance or thereabouts. It has taken a while, so I appreciate the impatience that I've seen on some of the comments back there. El Noob Master 50,000 was telling me that I was an idiot. The Bitcoin dominance is not going to react to this level, and I was like, well, it is what it is. It's a slow period of the month. Let's face it. It may or may not, but if it's going to do it, it's going to do it here. And looks like it's doing it. Not only that, accompanied with a short signal and what appears to be death crosses seem to be unavoidable at some point today. Yeah, there's bullish divergence, or there has been at least. Look, it's looking quite good. So I went back on my YouTube account just to have a look at just sometimes I feel a little Tom Petty and go back and go, oh, there you go, El Noob Master 50,000. But comments had gone. He had obviously seen the error of his ways and deleted the comments. Never mind. The algorithm served a purpose at the time, so I'm grateful for the comment, as I am for yours. And thanks for commenting and liking and everything else. Right, so thinking about Bitcoin dominance, we can see, I mean, it's just a handful of things that we've looked at, and that I only traded Avi actually over the weekend, and surprisingly, just all targets were met. Bitcoin still lagging a little bit behind Ethereum with a stronger chart, full on golden cross, and we saw that. We highlighted this on the stream, didn't we? On Friday, and looking pretty sweet. Bearish divergence, unfortunately, but ever so slightly. And we were saying this yesterday. We were looking for a kind of a pullback really yesterday, because Sundays often have that kind of behavior. But they pull back ready to move forward, depending on which way the week's going to open, and Forex markets particularly. So thinking about that, let's have a look at the Forex markets. The euro having another attempt at breaking a new high on this current run. Remember, this is a bullish chart, right? So we treat it as a bullish chart until, of course, it starts to break down below areas of interest. I'm still very much in favor of this plummeting, we could call it, or at least pulling back to the 200 exponential, which still, it's not much. It's not much. But on a Forex pair, that's actually quite a lot. It's 2.5%. I'm still very much in favor of that happening. I'm not saying it's definitely going to happen. At the moment, it doesn't look like it wants to happen here on the daily. That doesn't look like it wants to happen. Let's just check the 4-hourly to see how that looks. And again, the 4-hourly doesn't look like it wants to happen. And look what happened over here on the 4-hourly, a golden cross and a retest of that. So we've already had a retest of a golden cross just on a 4-hourly time frame. We're now completing a golden cross on a daily, and I would expect the same thing to happen. Maybe not today, maybe not tomorrow, maybe not until next week, maybe not until after that. But it's usually the case. Not always the case, but it's usually the case. And it's a test of strength in an uptrend. You only get golden crosses in uptrends, all right? So it's not a bearish thing to see it to see it pull back into that and then bounce from that. In fact, if anything, that's a buy the dip opportunity. It doesn't always work. I'm not telling you to do that. I'm just saying that this is the situation that's presented to us right now. And we've been following Forex for months now, because they give us the edge over all other markets, and it's worked out really well for us, all right? It's worked out really well. But again, the reason we look at the euro so dogmatically now is because it has such a dramatic impact on the Dixie, and the Dixie's pulling back, breaking back down below this, horizontal area, to be honest, and there's nothing much more to say about that. We've had bearish divergence on this current uptrend and a retest of what looks like is going to be an incoming death cross. There has already been a death cross on simples. We are going to get a death cross at this current rate on exponentials at some point, probably this week, at this rate. It doesn't have to happen. And finally, there's the S&P bouncing from this intermediate zone. Still putting in the, making the case that I've been saying since we came down here, that this could be, not definitely is, but this could be the bottom of the bear market for indices. Not for all stocks, not for crypto, not for commodities, but for stocks. So, no, actually not for stocks. That was about to sound really good then. but for indices, major indices, American indices, and maybe European as well. So, and again, it doesn't have to happen. It's still within a giant descending triangle, which is a bearish consolidation, downtrend, bear market. It's still within that formation, but there is a good chance that that is the bottom. So let's just move it over to our friend Bitcoin, and we'll wrap it up there, because again, it is early days. It's Monday morning. There's not a great deal going on here. We've actually rallied significantly in the night, which took me a little by surprise. Didn't expect to see that. I was looking for this kind of rally, maybe by Tuesday, but it's happening quite soon. So I still am looking for pullbacks, but even on this 4-hourly, not overheated on the money flow index. A little hot, but nothing. It doesn't really matter if it is hot on the RSI. We just look for divergence. We don't have that. Looking good on the MACD as well. There's nothing bad about any of that. We're about to cross over above the 0 point if we continue with this momentum over the next couple of days. So again, reclaiming that 17,000, and if we can hold that 17,000, which is backed up at this stage now by our 10 exponential, it would appear. Yeah, our 10 exponential it's backed up by. So there's things below us now. It's only the 200s which are above us on the daily. That is good. It's good stuff. Yes, I know, baby. So that's the little one in the back. I don't know if you hear. I have tried to set my mic so you can't hear all the noise and madness that's going on behind me. Now, on the bigger picture, the weekly still looks pretty dire. We can move into the 18,000s, which again is only $800 away from where we're at right now. That's no big deal. I did say that that's a likely scenario last week. Not that it would take place last week, but it's on the cards. The 10 exponential currently sits around 17,400. That's no big deal. We could reach there by the time you've watched the video, and by the time El Noob Master rises from his slumber out of his mother's basement, ready to have his Cheerios. All of that could have happened by then. And again, a rejection is likely from there, especially as what we've seen overnight. On a Sunday night, early hours of Monday before traditional markets are opened. Remember, the markets closed last week quite high, so a pullback would not be uncharacteristic of a Monday morning after such a high. We dumped and then moved up, which is exactly as expected. That's exactly what I said that was going to happen on Friday. We moved down and then bounced and moved up for a bearish retest on the death cross on the exponentials on the 4-hourly. So a pullback here as for Monday is perfectly fine. We'll see where we go from there. If we can hold on the S&P around these levels, that would be great. But again, S&P, there is a correlation with the way that indices move. With Bitcoin, and Bitcoin's done pretty well. Altcoins have done very well as well, and again, it shouldn't have taken us massively by surprise. This was all kind of forecast over that long, boring Christmas period into the early stages of January. So things are looking pretty sweet, I have to say. But I think caution, profit taking is where I stand at the moment, and I think what we should do is allow for the next dip to be presented to us, and then we'll work out if it's something that's strong and sturdy enough. And it's going to be to do with the same old, which is the euro. And again, the euro, I do favour another high and then a pullback, more of a dramatic pullback, which might be the dip that offers the biggest move. But it doesn't have to happen this way. This is a bullish chart. It's bullish as it goes up. It's also bullish as it retests this area. It's bullish, bullish, bullish all the way. Until, of course, we break down below this area, and definitely down below, I'd say below 103, things start to get pretty nasty. But it doesn't look like that wants to happen right now, so we shouldn't really entertain that right this very moment in time. But a pullback of around 2 to 2.5% on the euro could easily impact everything else to the tune of 5 to 10%. But that's not happening yet. But anyway, I'll leave it with you there. It is Monday. We'll wait and see how today closes, which should be an interesting thing to see, because we need traditional markets to do their thing. But things still look good. So it looks like continuation for the most part, but I'm certainly a profit taker this morning. Right, thank you for watching. I hope you have a nice day. Right, and take it easy.